we know the reports doing round that LG is likely to hit the bosses in India. In fact, it's eyeing a valuation of $15 billion for its India unit, and the roadshow is expected to be over the next 2 months, and perhaps in the first half of the year, we'll see LG hitting the bosses as far as India is concerned. What does it do to the consumer durable space in India? Mayuresh, that question is for you. How do you see this entire durables and EMS space shaping up?
Afternoon, Anisha. No, I think the space is poised for a significant amount of growth, and they've got significant tailwinds to probably support that. So in each functionality that they are now operating out on, the expected opportune market size globally and in the Indian context is absolutely expected to be at least 3 or 4 times than the market size that currently exists over the next 7 to 8 years. With a lot of impetus that has probably now been given in terms of local manufacturing, in terms of BLI schemes, a lot of companies are probably expanding their back-end network significantly so that supply chains probably do not remain an issue. And over-dependence on China in terms of input costs or raw materials does not pose to be a huge problem going forward as well. With all this in mind, the expectations in terms of the core EMS players, I think the immediate opportunity that probably comes through might be semiconductor chips. Expectations in terms of more work coming through as more manufacturing is expected out of India, whether it's smartphones, whether it's LED TVs, or whether it's high-end refrigerators as well. And therefore, I think not just the OEM part, where margins are a little bit minuscule for these players, but expectations of doing the original design manufacturing work, which is the ODM part, where margins are relatively higher. As that percentage as a proportion of overall top line starts improving, along with more orders coming in and backward operations being taken care of in terms of raw material supply and stability thereof, margin expansion probably might be one element probably to get along with the exponential top line growth. Obviously, I think the market size itself, as I said, for Indian EMS industry should be 3 or 4 times, reaching almost $60 to $80 billion over the next 4 to 5 years. So I think all these players in a sweet spot. Obviously, Anisha, you can keep on arguing valuations are expensive, and they are compared to their own standard deviation means over the last 5 years. But I think if numbers keep on coming through with more innovations expected, I think the momentum in these stocks can very well continue. So I think some certain stocks like an Avalon or a Dixon is something that we continue holding both in our local and our global portfolios. Obviously, we've taken these stocks at lower levels, but our own take is that if earnings come through, the momentum in these stocks might very well continue.
The other thing, Mayuresh, which has been pretty buoyant in the market as well, has been the entire capital market theme itself, right? And I ask this because you've now got DAM Capital, which has pretty much been the banker to every IPO, and successful ones at that, also IPOing itself very soon. And other than that, of course, we've seen the kind of move on a CDSL, BSC, Angel One, the entire lot. What is it that you're making of this theme, and whether it has further headroom to go?
So afternoon, Aisha. Obviously, I think capital market participants have done exceptionally well for the last couple of years. Obviously, the accretion that we've probably seen in terms of demat account additions, as an example, the SIP flows, which are continuing at a good pace. And obviously, I think equity as a ownership in terms of the overall asset pool that we probably got, it's still 5% way lower than the global average. So I think as more and more investors pile on and expect that markets probably have proxy in terms of how the economy is expected to fare and how you play it, whether you play it through depository participants, whether you play it through brokers, RS management firms, or PMS or specialized AIFs, which are listed as asset managers itself. I think this pool has to grow over the next few years. In fact, a couple of slides, if you go through in terms of either the asset managers will probably put forth, the kind of household incomes that will go up, specifically as far as middle income households are concerned, and the top tier households as well. You will need specialized advice in terms of allocation of their assets in a multi-asset format. And therefore, I think professional advice will be needed. So I think this play will continue in the Indian context. We've just started, as I say. Valuations, obviously, Aisha, a tad bit more expensive for depositories like a CDS at this juncture, exchanges like BSC at this juncture. But asset management companies, I think, are still sweetly placed. They're getting a good amount of inflow in terms of SIPs. A large part of their cost has now got gestated over years of running their operations. And therefore, as incremental flows keep on coming into their funnel, I think a large part of that reflection will happen in terms of both the EBITDA as well as bottom line growth. So I think something like an HDFC, AMC, UTIFC, a couple of these asset management companies should be kept on the radar.
Okay, that's the take coming in on some of these capital market plays. Kunal, today on Angel One though, do you think days like this could be a good buying opportunity, or do you think these stocks have already moved up a whole lot?
No, I think there is a lot of room on the for the stocks on the upside, because what we are seeing is a kind of a classical weekly monthly breakout for stocks like Angel One, which started off for a stock which it started off coming out of a consolidation. So for example, 2023 top for Angel One was around 3,500 600 mark. The lows the stock had made was around 2,000 2,100 levels. There was a sharp correction of more than 30-35% for a stock like Angel One. So it's now just coming back to recuperate the losses the stock had made from that 3,500 kind of a top. So the breakout and the kind of volume mix which we've seen in the last 3-6 months of the price recovery for Angel One indicates that the stock is yet to surpass levels of 3,500. So I think in that aspect, this should be taken as a buying opportunity. Now, what matters over here is that whether this is just an individual move or whether there is a cohesive move across the stocks from the spectrum, where you've seen the likes of Motilal, so financial services, JM Financial, etc. Many of these stocks are also coming out of their big consolidative price ranges. So which means that this is more of a synchronized price action move across a lot of brokerage houses. And I think in that aspect, I would probably look out for 3,500 plus at least as a minimal target for Angel One.
Okay, so that's the take coming in as far as Angel One is concerned. But in the meantime, which are the other stocks which are buzzing around on news flow? Not many, to be honest. We're fairly quiet. Vedanta, of course, is in focus on account of that dividend that they're going to mull. But the entire metals packs is as it is in the red today. So not a runaway rally there. NMDC was in focus on account of some iron ore prices volatility that we were seeing. And then, of course, from the frontline index, some of the pharma names were perking up. Dr. Reddy's being the case in point. Kunal, what's the view on some of these pharma names? Dr. Reddy's, Glenmark, Wockhardt. Some of these stocks are doing well in the trading session today.
You're not very bullish on the pharma pack, but yeah, I think these stocks are again coming back into a slight recovery. So there was a point where pharma index, and that was in the mid part of 2024, where the pharma index did exceptionally well. And there were two sectors which start to look very attractive, because many of these pharma stocks at that point of time were coming out of their 3-month, 6-month, 9-month kind of a corrective phases. Now, we are into that phase after this last 2-3 months of correction from the September highs, that many of these pharma stocks are trying to make a comeback. Some of them, for example, Dr. Reddy's, I think is on the verge of a retest just above its 200 moving average after falling from 1400 levels to as much as 1150, 1130 mark. So which means that the stocks have not yet retraced even 50% of the price correction these stocks had shown. So I would probably expect that the pace of rally for many of these pharma stocks could be very slow, very gradual. Yes, for someone who's looking at a risk, a low to moderate risk appetite, I think for them this could probably be an attractive space, because the beta nature of these stocks is inherently very low. And I think in that aspect, maybe one is looking out for a 10 to 15% return with a time span stretched to 6 months or 12 months. I think that could be a good strategy.
Right, okay, that's the take coming in on Nifty Pharma right now. But Dinesh, on the charts of a Nykaa, and then of course, Mama Earth as well, that's Honasa Consumer.
So Nykaa seems more interesting. The stock has entered the derivative space also, volumes have increased. And if you look at the last 10 sessions roughly, it's made same bottoms around that 165 mark almost every day. And the interim highs are closer to 176 in those last almost 2 to 4 weeks. And today the stock tried to cross above 175. That's an indication a reversal is in play out here. Could go back to 190.95, and if it sustains 190.95, then we could call it a trend change, because 190 was a problem zone in 2023 as such. So overall looks interesting. Could be a risk reward trade with a stop loss below 169.
Point taken. So that's a view coming in as far as Nykaa is concerned. But what's the view for 2025? This is a question we posed to our whole of experts which were joining us at the IEC in New Delhi. Hear out what they have to tell us.
For me, one is the new technologies are dematerialized and they scale up so fast that they become available to the poorest of poor. And that's where most of the wealth will be created. Earlier times, the wealth was in physical people. That's why it's called capita. What do you mean by capita is number of heads you had. Then it became land. and now it's becoming the new games, new experiences which you will create virtually. And for me, the next 50 years will create more wealth out of those newer things.
India really has once in a generation, once in a lifetime opportunity to get manufacturing back, which we completely missed. I mean, if you see the history of the world, countries go from agri-society to a manufacturing to services. We leapfrog from agriculture to services, but we miss the middle of that. There's a possibility in next few years, and now that the relationship between the two countries are improving, there's a possibility that I think over the next several years, we have a lot of opportunity in that space, what India can manufacture, not only for India, but also for the rest of the world.
India moves up from, I think, as we'll move to a $5 trillion economy, per capita income will move towards, $3,000, $5,000. The household savings will increase. And Indians, unlike the Western world, they love to save. They save for themselves, they save for future. Anything to do with savings, I think anything to do with wealth management, anything to do with the stock market, I think those are the companies and the sectors that I believe will do well.
I think India is going to be a wide sector participation. The diversity equity funds will be the best actually to play the India story.
Okay, that's the take coming in on the themes to bet big on in 2025. But in the meantime, just taking stock of where the market has been settling in at, and it's pretty much a status quo, while there have been some attempts of a bit of a clawback from the intraday lows, but not a meaningful one at that. We're still lower by about 92 odd points or so. Nalco, Adani Green, Jindal Steel, Titan, TCS, these are all stocks which are weighing heavy, as is underperformance for the likes of an ONGC, Infosys. Even HDFC Bank hasn't done a whole lot, or for that matter, L&T too. But Mayuresh, just wanted to understand what's on your buy list right now. While the market may have recovered from those stark lows, but anything that you recommended buying maybe a month back and continues to look good according to you?
So actually, I think quite recently we have recommended a buy on Affle India. Our take is that the numbers have been pretty resilient. They have shown in the first half a growth of 27% as far as top line is concerned. EBITDA growth has been in excess of 31%. Now, if you look at the last 5-year average, they have delivered a 47% top line growth with a 40% EBITDA and a PAT growth as well. Now, the best part about Affle India and their model is that the cost per converted user is showing an increasing trend. So it is currently at 57 odd rupees. What they have converted in terms of number of users, FY23 almost 25.5 crore users, FY24 that figure landed to around 31.3 crore users. As we head into the first half of this financial year, you're already at 18.5 crore users. If you just double that for the second half itself, you're going to see exponential growth come through with increase in CPCU rates as well. And therefore, I think top line growth should continue at a good pace. The demand stack that they're working with on the platform is expected to show exponential increase as well. Catering to numerous industries, including BFSI, Pharma, they've also got a gaming platform that probably comes through. And therefore, I think numbers should probably show an increasing trend. There is no leverage on the balance sheet, and therefore return ratios and earnings should hold on for a stock like Affle India. The other pocket, as I said, agrochemicals should do reasonably well over the next couple of quarters, to say the least. Good Rabi harvest that has probably come through, good reservoir levels as we see. A few companies have reported extremely good set of numbers. They're doing backward integration. Case in point, the company by the name of Paradeep Phosphates. They are doing backward integration as far as phosphoric is concerned. They're expanding capacity as far as sulfuric is concerned. They've reduced their debt equity. Farm gate prices have remained extremely stable as we speak. Input costs have come off. And therefore, with the coming season, I think volume growth should be reasonable, should effectively play out in numbers. And as we head into the first half of the next year and head into the Kharif season as well, I think the good show should continue with improved balance sheet dynamics. So I think agrochemicals as a space and Affle India as a standalone stock out of the mid-cap universe is something that we are liking.
Okay, point taken. So those are some of the top recommendations coming in. But in the meantime, let me take it across to Prakash as well. He's talking about some relief that the OMC companies are expecting from the government. Prakash, some of these stocks are under pressure, but what exactly is the news flow and what kind of compensation are they demanding from the government now?
yes, there is a positive development for the oil marketing companies as we are learning from our sources that the government is likely to provide relief to the OMCs. We are given to understand that the relief is likely to be provided on account of their losses on sale of LPG. In fact, the oil ministry is preparing a proposal to seek compensation from the finance ministry, and the consultations with the oil marketing companies have been completed regarding the proposal. Our sources are also suggesting that the oil ministry is likely to seek rupees 25,000 crore from the finance ministry. In fact, OMCs are incurring loss of rupees 150 to 200 on the sale of every domestic LPG cylinder. They have been facing losses for past several months. In fact, their profit has been reduced significantly during the second quarter of the current financial year on back of reduced refining margin and sale of LPG below market rate. The oil ministry believes that the LPG prices will remain firm in the international market due to higher winter demand, and therefore they are seeking compensation from the government. In fact, sources are also confirming that the oil ministry wants that the compensation amount to be announced in the upcoming budget. Let's see how it pans out, but at this point of time, there's a positive development for the oil marketing companies.
Yeah, OMC is definitely in the fray, and it seems that they're the ones which should be getting some amount of news flow. That's what we are picking up. Under pressure, though, in today's trading session. But look at what's really happening across the realty pack. That continues to look good. Oberoi Realty, Prestige, Lodha, these are your top performers today. Where is DLF though? I don't think DLF is quite participating in today's move. That stock perhaps is a little bit, no, that also is holding up. I stand corrected, 2.5% higher. So it's pretty much a sectoral move. But Mayuresh, not quite the same momentum as is the case with realty for some of these world economy facing sectors, be it an IT or for that matter, even metals. Metals, in fact, on Friday as well, with the rest of the market, didn't recover and was one of the sole losers of a sector. What is your own take on metals right now?
So I think I'm not expecting much because a large part of the LME realizations depend on how China will probably behave. With all that has probably come through in terms of stimulus announcements so far, and our interactions with the home team based in Shanghai in China, I think a lot of inventory is still not sold off, and therefore real estate still seems to be a big grappling issue as far as China is concerned. And obviously, I think their factories have to keep on churning and utilizing the fixed costs that they're probably generating, and therefore they're dumping to large parts of the world. So if you look at HRC, CRC prices over the past few months, they've actually started coming off quite significantly because of the dumping that we're probably seeing. A large part of the dumping is also happening in Southeast Asia. And therefore, I think with China expected to continue this, the softness in terms of LME realizations might continue. On the domestic front, volume might very well come down, but a large element in terms of realizations not improving might still be something to probably ponder about. On the other hand, if you probably look at the European side of the business, a large part of this business is getting skewed towards green steel. And therefore, I think the processes need to be modified to ensure that we produce steel through green modes. So either that's through the electric arc furnace route or otherwise. So I think there will be changes that probably happen in terms of traditional steel making, which will ensure costs and capital expenditure on a lot of balance sheets across metal companies in the world. The only thing Aisha working in their favor is inventory levels are absolutely low across the pack, whether it's steel, zinc, lead, copper, aluminium. But unless I think there is some element of hints of recovery coming through, and that hints of recovery coming through in terms of both China coming back and demand in Europe and the rest of the globe catching up, restocking will not take place in a significant fashion, which will keep LME prices subdued. So I think for a large element of the metals pack, I think earnings might remain subdued. Again, aluminium players should largely do okay. So I think stocks like Hindalco, as an example, might be a standout because of their captive sources that they've got, both in terms of alumina, bauxite, end user applications as far as the Novelis operations are concerned, or lithium and batteries to a certain extent, while aluminium casing still forms 31%. So I think Hindalco might be a standout performer, but generally I think it might be a subdued show as far as metals is concerned.
That's the take coming in. So just watching out for some of the metal names, but do watch out for Swiggy in the trading session. That is past the level of 600 rupees now. It was, of course, trading at a huge discount to Zomato, but a lot of initiations have happened and people are saying, yes, it's second, but it's still in the race and clearly catching up really fast. So whether it's a, kind of announcement of scenes, whether it's coming up with a lot more SKUs as far as Instamart is concerned, they're definitely back to the fight and the stock is up almost 13%. Just shy of 600 bucks now. Would you still be a buyer on Swiggy at 600 rupees, Mayuresh?
No, unlikely. Obviously, I think the discount has come up, Anisha, but I think it still needs to be proven whether what the management has probably spoken about in terms of getting the 3% EBITDA margin in the food delivery business by December of next financial year, and the Instamart or the Bitcom business breaking even 2 quarters after that. So I think if the next quarter is a testimony of what the management has spoken about and the losses start reducing, I think the premium or the discount that Swiggy had in terms of its comparison with Zomato, though it has narrowed down, I think there might be still a re-rating down the corner. But yeah, I think a stupendous move today. I think I was not expecting that. But again, I think a large part of it is now largely getting priced in.
Okay, a lot of it getting priced. Stock on a tear, almost up 13% as we speak right now. In fact, on that note, let's also take in some BTST ideas. Naresh, what's on your list? Naresh, you'll have to unmute yourself.
Yeah. Continue like Coromandel Fertilizer, very close to a breakout into new all-time highs. Stop loss at 1800, target price of 1880. Signals a buy. Dr. Reddy is trying to cross the recent swing highs, could catch some momentum. Stop loss at 1255, target price of 1320.
Kunal, what about your BTST ideas?
So the first one is a carry forward of what I recommend in the morning page industries. The stock looks attractive. Now I think perched at fresh multi-week high for itself, trading above 49,000 marks. So maintain targets of 50,000 over the very near term. Stop loss can now be traded to 48,500 for traders who are looking at a fresh trade. And the second would be about Samvadna Motherson or Samil. That's a chart which has come back from its sub 200 moving average of 165 levels to now 168 plus mark. Looks attractive for a target of 178. Stop loss at 163.
Okay, point taken. Take a look at United Spirits. In the last few minutes, there has been a bit of a perk up on that. Let's try and bring up the intraday chart and see whether that's really showing on the charts or not. Yes, there has been a sudden perk up on that stock. In fact, Alcobev as a category has been something which has become a bit of a favorite of select investors. In fact, I remember speaking with Mr. Madhukela last time and he was quite positive about this entire space and few other select investors as well. Mayuresh, what's your sense? Yes, it might be underpenetrated. Yes, it might have some other levers, but it's getting fairly competitive with global as well as, national players launching new products and coming up with fresher ideas. Yeah.
No two ways about it. But again, I think our whiskies are also making an international mark, Anisha. So I think we are getting those awards and our whiskies are very well appreciated of what our guys are doing. Again, as a theme, again, I think there is significant amount of scope for significant volume growth to probably happen. The entire premiumization element for all liquor makers have actually started working in their favor. And obviously pricing remains in their favor. Again, there is hope that there might be price increases in certain states that might come through in the next few months. And if that probably happens, that becomes an added advantage and abets the overall volume-led price growth that one speaks about. On the other hand, if you look at input costs, molasses are probably behaving at this juncture where the expectations of glass prices, barley prices across the universe for alcohol makers, they remain stable at this juncture. And therefore, there is an element of scope that as consumption patterns evolve, as volumes pick up happens, as premiumization happens, as pricing remains in their favor, that element of operating leverage starts getting played out on balance sheets as well. So yeah, we remain constructive on this space. Anybody holding stocks like a Radical or United Spirit should continue.
To hold these stocks, but Kunal, do they make for a good buy at this juncture?
And no major trends for many of these Alcobev names, because I think United Spirits, for example, just about last 2 days, the stock was trading very close to its 50-day moving average. The high the stock had made, around the 1650 odd mark was just about a few months back. But post that, the stock has neither gone to a very sharp correction, nor in this recovery the stock has shown any kind of a V-shaped recovery or a major price action move on the upside. So which means that more or less the stock is consolidative or trading into a range. The ideal time to buy these stocks are those intraday dips or corrections and back towards their key support levels where the risk reward starts to look a lot more attractive. If you buy them at medium, then I think the chances of consolidation and then holding on to the stock is pretty much on the higher side.
Okay, let's begin winding up for the day then, and we are definitely closing in with a 90-odd point sort of downtick, so didn't quite manage to follow through from Friday's session. 95 points lower on the Nifty futures is where we're shutting shop for the day. The key large caps firstly under pressure. Sectorally, it was definitely metals, oil and gas, infrastructure, power, even technology, and some of the financial and FMCG names were on the back foot. So the likes of a Titan, BPCL, Hindalco, TCS, Shriram, Adani Ports, ONGC, Adani Enterprises, they were all the laggards in today's trading session. From within the gainers then, it was about Dr. Reddy's and Edison, Bajaj Finance which held out well, ICICI Bank did okay, and then it a flourish move for an SBI and a Kotak Bank. And that was pretty much the case with an ITC, Trent and L&T as well, along with M&M. The broader market is where pretty much all the buoyancy was. So be it the new age stocks, be the capital good names, banking, pharmaceuticals, and of course media and realty, that's where your big winners were in the session. First, talk about the new age names, and the entire pack was a buzz. Starting off with a Policy Bazaar, which closed in with a gain, less than 1%, but a great gain nonetheless. You had a Naukri, which did very well. Paytm was up about 2.5%. Zomato held out by about 3%. Nykaa was up about 4%. And of course, Swiggy is the one which made those delightful gains, stunning with almost a double-digit gains. 12% is the kind of move that you had on Swiggy in today's trading session. Other than that, of course, it was really, realty all the way. Look at the kind of moves that you had on an Oberoi Realty. It closed in with almost a 6.5% gain. The index itself, like you just saw on your screens, with a 3% move coming in on that stock, or rather the index. There was Hoodco, 5.25% uptick there. Prestige, which held higher by 4.5%. Lodha looked good with 3.5% move. DLF held out very smartly. Even a Godrej Properties, which closed in with a good 1.7% gain. So good day, but very sector specific at that. We'll wind it up right here then on this edition of Closing Trades. Thanks for watching.
If you like this video, then like, share and subscribe to ET Now.